Hi everybody, my name is Nick Kerley and I am the broker owner of Realty 110 here in Reading. And today my guest is
Darian Croce, the owner and principal of Parallel Tax and Parallel Wealth Management.
So I had Darian on today because one of the misconceptions sellers have when they call me and we're selling their house or they're talking about what their proceeds are going to be, they always ask, well, what are my capital gains taxes going to be? Well, if it's your primary residence and you've lived there for more than 2 years, there's actually a huge tax benefit to you. Darian, can you tell me a little bit more about that?
Absolutely. You can sell your primary residence once every 2 years and take a $250,000 exclusion from the gain and the profit of your residence. If you're a single filer, if you're a married filer, it goes all the way up to $500,000. Again, you can use this once every 2 years.
That's awesome. If you have a house and you bought it and you're, making $200,000 in net profit or $300,000 in net profit and you're married, that's going to be a full exemption. So there won't be any capital gains tax on that. That confusion usually starts from, people that sell investment property, which is a totally different animal when it comes to capital gains taxes. And, we'll have Darian on another time so we can kind of dive down that and get more information. But basically, if you do want to sell your house and you are worried about, capital gains taxes, if you live there for more than 2 years, you should be in the clear. Is there anything else that people should consider when they're thinking about setting up their basis?
One thing that we find as tax preparers and financial planners that get a lot of people in trouble is they don't keep accurate records of things that they improve in their house that adjusts the cost basis. For example, if you pay $200,000 for a house and you put a new roof on it, you put a new HVAC system into it, you put new windows, new flooring, remodel your bathroom and your kitchen, all of those things take that $200,000 price and tack it on and build it up to a different cost basis that erodes away some of the gain that we're going to sell or that we're going to capture from when we sell it on. So make sure you're keeping really, really good, adequate records of all of those improvements.
That's great advice. It really, especially if if you owned your home for many years. The appreciation factor here in Reading has really accelerated over the last 5 years. But, definitely if you've owned your house for the last 10 or 15, 20 years, you want to make sure you go back and keep track of all those major high ticket investments that you put into it. Because chances are, you could definitely net more than $250,000 out of the sale. And if you're married, you could even net more than $500,000 after the sale. So that's great advice. Darian, I really appreciate it. If somebody wanted more information, had some more questions about taxes or, wealth, where would they go and how could they get a hold of you?
You can check out either one of my websites, retiredyourway.com for the financial planning side and paralleltaxes.com for the tax side.
That's great. Darian's a great wealth of information. We use him directly. I highly recommend you give his outfit a call if you have any questions. Really appreciate you stopping by. You're welcome to reach us directly at 530-242-4114 or at realty110.com. Thank you again, and we look forward to seeing you again soon.
Thanks, Nick.